Hello, everybody, and welcome in to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm very excited to be welcoming in Clem Chambers to the show, a financial journalist, founder of ADVFN, Europe's leading stocks and markets website, and the author of books such as 101 Ways to Pick Stock Market Winners, A Beginner's Guide to Value Investing, and many more. We're going to talk about gold and why he sees it as a strategic necessity in our current era of global conflict and economic uncertainty. We're going to get his take on the continued tensions between the US and China and how he sees the trade war developing. Has the Trump administration bitten off more than it can chew? We're also going to talk about silver, the future of the European Union, and so much more. I hope you'll enjoy my conversation with Clem Chambers. Clem Chambers, great to have you on the program. I want to get started like I do with all new guests. That is with a very broad question, which you can feel free to take wherever you'd like. What are the main themes and trends you're currently watching when it comes to financial markets and the global economy that you think more investors should be paying attention to?
Well, I think it would be very strange if they weren't already glued to the current situation. I mean, everything that's going on at the moment is really being driven by the White House. And, that's the only thing. Unfortunately, it's extremely hard to predict. If you want to be kind about it anyway, it's extremely hard to predict. And I'm in that camp I can't really say I know what's going to happen next. I think I know. I've got a pretty good feeling, or in this case, a pretty bad feeling. I mean, if you look at the very nearly crash of a few weeks ago, which I predicted, and I got out before. I mean, I literally got out before it happened. In fact, quite a lot, like 10 days before it happened. It makes it worse for me because I go, well, I saw the last one coming and the market didn't see that. Or the people who, the market didn't see it, which is why when it happened, it was a crash, right? And I saw that coming, and what I see coming, and the market doesn't see that either. And trust me, I don't want bad things to happen. And you can read my predictions that I made on this thing happening, because they're on the internet, because I wrote for Forbes on it, and there it is. Basically, we're all going to get a lot poorer. I'm not, but a lot of people are going to get quite a lot poorer. And that is a sad thing. And the other thing that gets me is I don't really know where the bottom is either. Not in this case. Normally I would. I go, well, where's the bottom here? Is it 25? Is it 50%? Is it 75%? Is it 89%? Is it a dot-com crash? Is it a good old credit crunch, global financial crisis crash? Is it just a normal crash? And is it a little bit worse? Because when you get crashes, it goes 25% down. That is a crash, okay? When you hear people say that's a bear market, that's completely wrong. It's not a bear market. It crashed. And it could go straight back into a bull market, So it's a crash. 25% is a crash. If it's a big-ish one, it's 30%. So a normal crash is 25%. They're not very common, but when something goes 25% or even takes time to go down 25%, that's a crash. If it's a serious one, it's 30%. If it's a massive one, it's 50. And we're talking about massive at 50. And then if it's a 1929 or a .com, it's a 75 plus one. And I can't tell you which one it would be, but I would expect the market says there's going to be a deal with China, everything's going to be fine, and Europe, it'll be fine. Okay, please, yes, please, yes, please. I'll take delivery of that, please. But we might be out of stock of that, and if I really have to twist myself up in a ball to see that I'm going to say what went right. Really have to. I can't actually put those pieces together. I can't put Humpty Dumpty back together again when I listen to what's around. So I'm completely convinced that, the White House is serious about what it's going to do. And that is really, really bad for the global economy. And that will cause recession, depression even. And here we are. We're actually here. At the best, we're only 8 weeks away from, if it just stays like it is, 7th of July, I think, as I recall, 7th of July, on come all these massive tariffs. They start taxing the penguins in Antarctica. That is going to be cataclysmic if all these deals get done. And it's, the EU only has 10% tariffs and That's still going to throw the markets into a major bear and a major disconnection, a major disruption. And historically, you just can't get away with that. It doesn't. People don't go la 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 la. We're still in a bull market. Up everything goes, because the whole thing is broken. And if you pump in liquidity like the Fed would, have some free money. There's disruption. Let's paper over that with some cash. You get inflation, and you've got tariffs, which cause inflation. You've got liquidity support, which causes inflation. So you get big inflation. Well, the markets don't like inflation. Don't like that at all, and down you come. So it's like, how does it, unless you have massive runaway inflation, and, the reason Bitcoin is $1 million a coin is because beer is $600 a pint. If you go South American on this stuff, you can have the markets at 50 million, 1,000 billion, because your money is confetti. But I don't see that happening either. So under normal circumstances, you go into what is properly a bear market. Now, boys and girls, a bear market is a market that trends down. It just keeps kind of going down, and it keeps kind of it went up, down, 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 down. That is a bear market. A bull market goes uppity, uppity, up, funk, uppity, uppity, up, funk, uppity, which is why you buy the dips. That's a bull market. And we've had that for so long, people don't know what a bear market is. The market's gone down 20%. It's now in bear territory. What a load of rubbish. A bear market can be at the very day the market hits the top and goes down 1 point. You can now be in a bear market, because it ain't going up anymore. It's only going down for the next year or 2 or 5 or 10. Yeah, that is a bear market. And I think we're going in a bear. We're going to be in a bear, the first proper bear, long-term bear, for a very, 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 very long time. You could say QT caused a bear market, because you can see in the chart there's about a period of about a year when it just goes down and then it goes across a bit. And really nobody made much of a return. I think it was 22, if memory serves, around then. Nobody was making much money in the market because it was just grinding down as the Fed pulled money out of the system to kind of pull back all its liquidity that it had smashed into the market to keep it from cratering. Or the economy, not just the market. But, this could be the sort of bear market that goes on for 5 years. And that's not happy, is it? Not happy at all.
And now a quick break to hear from our sponsor, ARC Silver Gold. Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1-ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. Let's talk about gold for a moment here, because you wrote a very interesting article for Forbes last month where you said, at the top of the monetary food chain, gold operates as an intergovernmental currency and, most importantly, as the currency of war. Paper promises don't hold up in existential conflict. In times of rising tension, governments need more gold in their vaults. In its simplest form, gold is a strategic necessity. So we are certainly currently in an era of rising tension, global conflicts around the world. showing no signs of slowing down. Russia, Ukraine, obviously the notable one that Trump was trying to get wrapped up. He ran on a campaign that he was going to get it wrapped up. It does not look like that is going to be happening, at least not in the immediate future. How do you expect gold to continue to play a role right now? And you mentioned that we're potentially headed for a very severe bear market. So in that situation, is gold kind of the ultimate asset to be holding?
Gold has its problems for normal people, and it comes down to custody. You really, they say in crypto, not your keys, not your Bitcoin, but gold is kind of like that. And where are you going to put it? In a sock? Okay, that's not good. In a safe? Well, that's not really secure either. Oh, down the bank in a vault? Yeah, you're getting a little bit more comfortable there. But, then somebody busts the safe deposit boxes open because there's a drug dealer stashing stuff there, and you got to explain where you got the gold from. And, so that's not perfect either. Oh, so you put it in a vault with a company. What about the company? And then tell me about how good they are. So gold has problems, okay? And the main one is storage. Yeah. So, but, gold, you were saying about Ukraine and Russia. Okay. Let's imagine it was sorted tomorrow. Well, do you think Europe's going to be comfortable? Oh, that's fine, Vlad. Yeah, we're great. We're all friends now. La, 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 la. No. No. They're going to be looking, east going, oh, no. Poland's loading up on gold like that's in the news. I wonder why that would be then. Yeah. So, that tension ain't going to go away. And I was literally a few weeks ago, I was joking to somebody about India. Well, at least India, at least they haven't got anything going on. And now they have. Now they're on the, everybody's going, oh, Pakistan, India. There's nobody out there that's not in this ever increasing spiral of tension. And where does it end? You can go all doomster about it and say, oblivion and nuclear war and all that. Oh, no. But it doesn't have to. But what turns it around and makes everybody sing Kumbaya around the fire with their marshmallows? Nothing in sight. Nothing in sight. So it's only going to get worse, more tense. There's only going to get more Cold Wars. The Cold War with China has already begun. So, a Cold War is already, if you listen to the White House, they are planning for war. This is all about planning for war with China. It doesn't make any sense outside of preparing to be able to have a conflict with China. Well, being able to and preparing for a conflict with China is most of the way to having one, isn't it? For example. And how long does that process take for you to be able to build ships? It's years. It's years and years. How long does it take to onshore all your chips so you can build drones so you can fight a war? It takes years. So that spiral is going to go for a long, long time. And the thing to think about is it doesn't have to end in terrible things. It could, but it's not. That process is not going to stop. And when you look down the other end of the telescope and you go, what is the value of gold? Teeth, watches, electronics. It's got a use case, but the big use case is governments have it as a strategic asset, and they have buildings full of it. They park tanks on the top of their vaults, Fort Knox, for example, and they stack it. Yeah. So the use case, the big use case, what makes gold valuable is its use case. And that use case is as this hedge against conflict. Yeah. So the use case means it will get more valuable in real terms. So it's not only going to go up in price, it's going to go up in real terms because its use case is expanded. And something in the old days, a few years ago, people say, oh, gold should be much higher and it's being manipulated by banks and la, la, la. Which may or may not be true. I think there's some truth to that. But they can't manipulate the price of gold when the governments are buying it. They're not going to go short gold when it's a country buying it because they're going to have to deliver it. Yeah. So they go, these games we're playing with the private investors, we have to stop that. Get out the way. When those guys buy, you buy and give it to them. That we can't. These are the £800 gorillas. We can't corner the market when the government's buying. And they're not going to stop, are they? Why would they stop? What is going to make them say, we've got enough gold now? Yeah, 3-year war, 3-year world war, we've got enough. No, they just keep buying. And that's going to keep pushing the price. So unless, for example, a major company buying gold said, no, it's fine now. We're not going to, go over that border. We're not going to struggle over this technology. We're going to stop spying on them. We're going to be nice. And we're going to play nice. Unless one of those big countries suddenly goes into that mode, everybody's going to be buying gold forever. And there's quite a lot made every year. I mean, people have to realize there's 3,000 tons of gold every year made, which is 1% of total gold supply is manufactured out of the ground every year. So there's always been that drag. Well, now it's got a customer that can to drain that and take everything that comes out of the ground. And that's China and America and India and Russia and Europe and America and who isn't going to be buying it for strategic reserve. So it's just going to drive it. It's like, what's the alternative? Oh, they don't need gold for as a currency for war. No, that's not its purpose. No, that's a wrong model. Well, it's clear, isn't it, that is the model. Why else would a government have a building full of gold? It's not going to make gold coins and turn that back into money, is it? With silver and copper. I mean, they're just about to cancel the US 1 cent piece. Who needs physical money? It's so good as digital thing for all parties involved. They're not going to remonetize. So if you say, well, they're not going to remonetize, why are they keeping it then? And it becomes obvious that gold is for war. And that's why, the strategic need for a hedge, when that occurs, when you are having you're in that conflict and you're losing and you want to buy some ships or whatever it is, you're paying in gold.
How do you view silver's role in all of this? Do you view silver as a levered play on gold, more of a speculation, a strictly industrial commodity at this point? What are your thoughts there?
How I think of silver is, it's kind of like, it's a little bit sort of modern economic. There's gold is B to G and G to G, government to government, business to government. Okay, so the businesses dig it up and governments are buying it. But silver is B to C. It's the consumer equivalent. So if you look back into the history of money, copper is what you buy your eggs from your neighbor with. Yeah, if you buy the chicken, you might, or a couple of chickens, you might pay in silver. And if you buy a horse, you pay in gold, or hats. Yeah. So the hierarchy of value is, gold's the heavy currency, therefore it's governmental. Yeah. Silver is a consumer. So it's the man in the street. It's a retail asset. And that's why it's detached recently. Why gold's gone on a run and silver hasn't. Because who's buying the gold? It's the governments. They're not buying silver. And I tell this story over and over again because it tickles me. When America retreated from the Philippines in the Second World War, they took the gold, they put it on a ship. And I need to research whether a ship or a submarine, but anyway, they put the gold in a boat and they sailed off with it. They took the silver and they threw it in the bay. And so that's all you need to know about silver when it comes to governments. No, threw it in the bay. Japanese made an American prisoner of war, dive down and pick it out again. But that is the model for gold and silver at the governmental level. Now, if all of a sudden everyone went, I went on that show and with Jesse and I thought, oh no, I'm scared now, they would buy silver and silver would run. And they'd buy gold, but mainly they go, well, I want to buy, that's 3,200 an ounce for one little coin. I'll buy a sack of old quarters. And that cost me the same money. And I've got these little coins and if terrible things happen, I can go out with a little coin and I can buy that chicken or I can get my tank of gas. Can't do that with an eagle, can you? So, retail would go silver. So that if and when because gold can run and run and run because governments are buying it and they go to silver, don't need that, don't want that. No. So it can detach and stay detached if governments are buying gold. But what will happen is retail will go, oh, look at gold. Oh, no. Damn, I missed it, blast. I better buy some silver because that's going to keep going. My neighbour said, my neighbour that made a load of money buying gold that's showing off. I need to get on that bus, and I can't get on with gold, so I'll get on with silver. And then the retail would spike silver, and they are kind of automatically attached. Yeah, they are automatically attached by the way that the market works. But when there's an external force dragging the price of gold up, those forces are not one to one. It won't naturally go up exactly the same. And that's why you've seen that detachment, because it needs retail to want to buy precious metals for it to drive the silver price. And by the way, there's a funny ratio on how much silver and gold is made every year. There's way less silver per dollar of price than there is gold. If you know, it's like if you take platinum, $1,000 an ounce, right? They only make 180 tons of that, 180 tons a year, and it's $1,000 an ounce. Gold, 3,000 tons, $3,000 an ounce, and platinum is probably way more expensive actually to extract. I'm not sure about that, but it's not a cheap thing to make. Is platinum, but so the output is so small that if it ran, it would run really far, really fast, because there's not much of it. And silver, in comparison with tons of silver and the price of silver, it's not 100 times more silver comes out of the ground a year than gold. I don't know what the ratio, but significantly less than 100 times. So that's quite interesting. So anybody who's an investor in precious metals should do the sensible thing, just DCA, dollar cost average. I'll have a little of that this month. I'll have a little of that the next month. I'll have a little bit more the month after. I'll have a little bit more the month after. That's always the way to invest strategically. Not to go, oh no, sell the dog and buy gold. That is very, very, very dangerous way to behave in markets just in general. So, you go, oh, $100 a month, $200 a month, $300 a month. I'll buy 10 ounces of silver every month for the next 10 years. And you end up with a lot of silver, and you end up back with that custodial problem of where you're going to put it all and it be safe, So the way to go for people is actually to stack, because ultimately, if this is all nonsense and wrong, you've not overcommitted, and maybe it doesn't happen tomorrow. Maybe it happens in a year. Maybe it happens in 3 years. And if it never happens, at the end of 10 years, you've got a big savings account with precious metal in it. And, there you go. Oh, look, I was saving £200 a month, 2,000 a year for 10, 20. I got 20,000 in silver, and I didn't even feel like I did it. So, that's the way that I invest in strategic things. Is I just buy clips regularly, bank, automatic purchase of, and forget about it. It's a good way to save. But right now is an important moment outside of being sensible the way that you acquire it. I mean, I've been acquiring gold for best part of 5 or 6 years in that way. And, I feel clever now, but I'm not Goldfinger. I don't love it. He loves gold, and that's not me. I would prefer to be buying stocks and businesses and all that good stuff, because that's much more, I love that. I absolutely love that. Stacking gold, I don't, it gives me no pleasure at all. It gives me nice profits at the moment, but no pleasure. My game is equities, and that's a very fun game, and I can't play it because I'm not a shorter. I'm not interested in making money out of other people's misfortune. So I just sit there like a dragon on my gold and wait for the bottom and wait for the smoke to clear. And I hate that.
What are your thoughts on the rest of the commodities sector right now? There's that narrative out there, especially on this show, a lot of guests talking about how when we do see the broad market eventually enter bear market territory, we will see a rotation of capital from these overvalued tech names into hard assets in the form of commodities, the whole commodities supercycle narrative. Do you ascribe to that? And are there any commodities outside of gold and silver, some people might just call them monetary metals, but things like the energy sector, oil and gas, uranium, base metals, is there anything that you think could present opportunity in the bear market that you're seeing up ahead for the broad market?
What's it? The character for chaos is opportunity in Chinese. Well, there we go. That's ironic, isn't it? But there will be chaos, and therefore there will be vast amounts of opportunity for sure. It's more about looking at that through the lens that you, as an investor or trader, are comfortable with. So if you have to ask, the answer is no. Should I buy corn? If you have to ask, it's no. Even if you're right, if you have to ask, you don't know what you're doing. And if you don't know what you're doing, you shouldn't do it. Not in the market, because if you don't know what you're doing, it's 50-50. And a 50-50, you just take off your cost of doing it. And pretty soon you'll have no money because you'll just pay it away in costs. So if you have to ask, the answer is no. But what's going to happen? Well, I really, this is really contrarian actually. People go, really? I love platinum and I love palladium because they are ridiculously cheap. And, I've actually borderline, well, I recently bought a lot actually, but I don't DCA platinum. And I will be, when I hit a certain weight of silver, it's totally rational to do it like this, but anyway, when I've hit a certain amount of, few hundred weights of silver, I will stop, and then I will then start just DCAing platinum or palladium, possibly palladium, maybe platinum, because they don't make any of it. I mean, go Google. In fact, every time I have one of these shows, I, at the end of it, I'll go off to Google and check my numbers and go, is it really 180 tons? Surely it can't be. I must have got that wrong. I'm going to look a complete idiot when it's 1,800 tons or something. No, it's 180 tons a year. I still can't believe I'm saying that. I still can't believe that can be true. Yeah, and my model is that, and this is very rude to a lot of people. A lot of people will well, your viewers won't. They'll go, yes, but a lot of people go, oh no, how dare you? Fossil fuels are not going away now. It's the opposite. You see, the underlying thing that happened in the last couple of years, which is wonderful news on the one hand, maybe not so good if these other people are right about what I'm about to say, is possibly quite dangerous. And I'm actually in the area of remediating that, is that AI is energy. Okay? If you want AI, it's pure energy. You pump energy in, it blows out hot air and AI. That's what AI is. That's what silver centers are. And you go, well, so that's fine. They've been doing that with crypto. They've been able to get rid of, hydrocarbons. Quite okay, even with crypto kind of doing that. And then you go, but there's no second place in AI. There's no natural cap to demand. In fact, there's no natural cap to how much of that will be made. So there's no natural cap to how much energy you're going to need to burn. Because in intelligence, there's no second place. So it's going to be a competition, isn't it? And now go back and listen to what the White House is saying. And you're hearing, ever increasing spiral of conflict with China. And what's the key thing to that? AI. That's it. If you ain't got AI, you ain't going to win, are you? If you haven't got AI, you're going to end up like a fourth world country with these, super intelligent aliens, taking what they want from you because they're twice as smart as you. So you can't afford that. You absolutely cannot afford that. So you have to have all the AI you can possibly have. And that means burning all the energy you can possibly get your hands on. Nuclear. Well, why is nuclear all of a sudden popular? That used to be like kryptonite. Oh my God. Oh, radioactivity, nuclear. No. 3 Mile Island, China syndrome. No. And now it's, oh yeah, nuclear. Oh yeah. Why is it all suddenly popular? Well, because if you haven't got nuclear power plants, you ain't winning the AI battle, are you? So under that model, yeah, you've got the need to remediate. I mean, you might say I'm being a bearer of bad news here for a lot of people. Yeah, because they go, no, global warming, climate change. No. But platinum and palladium are the metals that remediate that, because that breaks that pollution up into less polluting things, which is why you've got cat converters in your cars. I mean, imagine a conflict. Imagine you are a country that's worried about having a conflict. Are you going to have electric battery-powered tanks? Are you going to have electric cars driving around on the battlefield? Hey, where's my charging point? We're getting a bit low, No, you're going to be burning diesel, aren't you? Yeah, etc., etc., etc. But hey, we've all the windmills we're using all that. Oh, all the solar panels we're using all that. Oh, we're using all the nuclear power plants. Oh, we're using all that. Oh, we're using all the tidal barriers. Oh, we're using all that. But we need more. Okay, well, we better start using natural gas. No, we use that. We need more. Oh, okay, then let's start burning coal, shall we? Ah, okay. Well, that's not a good idea. We've been desperately trying to get rid of that. Oh, and nuclear as well. But, we kind of got comfortable with that. And so on and so on. And platinum and palladium are just the sort of elements that remediate that kind of usage because, they're catalysts and they break up pollutants into less polluting and less obnoxious chemicals. So, if you imagine, well, you can see that the inverted commas, the tide is turning on climate change. It's no longer the holy grail. And you've got to ask why. Why do they want nuclear? Why is it all of a sudden not so bad too? Why all of a sudden are they not turning all the cars into electric cars? Why are they rolling all that back? Well, because they have to, because they need more energy. And it's not that they don't have enough now. How much more energy do they need? It could be 2x, could be 5x, could be 10x, could be 100x. There's no second place in AI. No second place. So what's your country going to do? It's going to just say, no, we surrender. No problem. There will be AI superpowers. And who are they going to be? Well, America's going to be one for sure. China's going to be one for sure. Russia is too poor. Europe's going to have to try. Yeah, because if you're not an AI superpower, you are basically colonized, aren't you? You become under the umbrella of the AI superpower. And well, India's not going to want to do that. And as I say, there's not enough people, not enough money in Russia for them to really do much about it. So you're going to have 4 AI superpowers: China, America, Europe, India. Yeah. And they're going to absolutely go hell for leather for energy. Oh, uranium, yeah. Uranium, for sure. Absolutely for sure. Thorium is going to be a thing. That's something I'm in, thorium. I'm working with the University of Leeds on thorium technology. And I'm working on remediation of various environmental issues that exist, but there are going to be more of them. And, so I say it, well, it's not my idea, all this, boiling the oceans. It's not my idea. I'm not going to be boiling the oceans, but people going to have to clean up after all this or make it less environmentally bad. Because it can be. I mean, you only have to go to China and see the pollution in certain places to see what, going hell for leather with energy, how absolutely nasty that can be. And I'm old enough to remember what the buildings in London used to look like when they were covered in soot. The buildings were black because they burnt coal. And, if all of a sudden you need to burn 10 times, and there's thousands of years of coal. So if you're in a war, you can burn it at 10x the speed, and it still lasts you 100 years. Yeah, so there's no lack of supply, but there'll be no lack of demand. So commodities that feed that beast, copper, you need wires, don't you? Lots of wires, and they needed lots and lots and lots of wires just for electrification of things like cars, just for net zero. They needed, didn't seem to affect the price. That's the thing that makes me wary about commodities, is that there's this clear and obvious road of massive demand, and commodities go, they don't go. So, this is strategic, very long-term things. So as an investor, you have to have a vehicle for that. That's strategic. That's good value for your investment with a good counterparty. And all those technical things, that's very, very important, because I'm going to invest in copper over the next 20 years. When in 20 years time, I'll be 50. And so I'm going to invest for 20 years. I need a vehicle for that long strategic investment. And that's the way, and you can do it with precious metals to a greater or lesser extent. So that's your call. Anything that is linked to energy is going to be big. And the governments, they know that already. And they're going, oh, how are we going to do that? Oh, we don't make the chips. Oh, no. Where are they made? Oh, no, there. Oh, no. I think we better onshore that then. And so on and so forth. Once you get the global conflict thing and who the global conflicts are between and what is the ultimate weapon, which is intelligence, and then you start listening to what's being said that doesn't seem to make any sense, it'll all start making sense to you. And platinum, palladium. I mean, palladium was $4,000 an ounce only 2 or 3 years ago, and it's now $1,000 an ounce because everybody's crushing cat converters and actually crushing them, sending them to China. Oops. And, they're taking your platinum and palladium out there. But so there's this supply in the system that was going to go from, lots and lots of tons of platinum and palladium in stuff that was going to be made obsolete, that was going to come into supply. And that's why the price is so low. But the moment that stops, or appears to stop, or appears that it might turn around, because they're going to need the platinum for doing this with, making stuff like ammonium as a fuel. Well, why would you make ammonium as a fuel? Well, you can't get enough fuel. There's no such thing as enough. You see, that's the thing. There is no such thing as too much AI, and therefore there's no such thing as too much compute, and therefore there's no such thing as too much energy to drive that. There's no cap to that. There might be one. There might be a chance that you can only get so much intelligence out of these things, but I don't think so. I was talking to a very, very important person in the science community, and they said, well, there's only going to be so much need. And I said, well, tell that to the military. And they said, well, so every tank's got AI. And I said, what about the swarm of 1,000 drones that flies out the top of that tank? And they went, oh yeah, well, yeah. And then I said, what about the 5 pieces of AI in drones? And what about the AI for them all talking to each other and then talking all back home? And what about all the AI in all the bullets? Every bullet's got a little computer in it that steers it towards the bad guy. Well, how much AI do you need then? It sounds like science fiction until you start seeing people with self-aiming sniper rifles that can shoot you dead at 5 miles or whatever it is. And they exist. Yeah. So it's not going backwards, is it? They're not going to say, no, we won't have AI in the guns. We won't have AI in the tires of the cars and the headlights and in the watches and the glasses and the earpieces and the drones and the helmet. We won't have AI. We don't need that. It's going to be everywhere. It's going to be everywhere on all the time. So there is probably no limit. There's a small chance there's a limit, but I don't think there's a limit to the demand for AI and therefore all the materials and commodities that go into that. And that's energy and all the things that go along with service centers. I mean, why are they building all these services? They're building them everywhere. Everywhere you look, they're building one. Yeah, well, funny that. I wonder why. And this is going to be the massive driver for so many, well, for everything, absolutely everything. If you're a bright person, if you're a normal person, you get a 10% uplift of IQ from AI. This is nice. You're 10% smarter. If you're a bright person, you get a 50% increase. No, 30%, sorry, I got that wrong. So if you're 100, like most people, you become 110. Good news. If you're 150, i.e. you're a professor in a university with a brain the size of a planet, you're now 200. So you've gone from a gap of 50% to 100%. Well, that's the sort of impact that AI is going to have to the world. And it's actually very good news for the world. And a lot of people go, oh no, artificial brain, bad. Well, artificial muscle was very good, very, very good. And the Luddites hated it. And 95% of the people lived in the countryside and were farmers. And within 100 years, hardly anybody lived in the countryside. All the houses were ploughed in and they were living in cities. And yes, they did all lose their jobs, but they all went from living 40 years old in 1710, they lived to 40. And now in our year, we live to 80 and nobody lives in the countryside, nobody does farming, and everybody lives in the city, and everybody has lovely jobs and lives twice as long and doesn't have half their children die before they're 5. So that was the impact of artificial muscle. So the impact of artificial brain, it could be a 10x of that good news. If we can get there, and the adult governance of the world doesn't take us too far down the wrong path.
Great breakdown there. I want to end on discussing the European Union. You did a recent interview with David Lynn. You said Europe will be one of the next superpowers. This brought a ton of heat in the comments when I scrolled below. A lot of people were very upset about this. I think some of the counterpoints to that argument would be the EU's obsession at the moment with going 100% renewable energy. I think you believe that's probably going to change. You said that already is dying down.
I think it's gone.
Yeah.
It's gone. They won't say it, but it's gone.
And then, so obviously 100% renewal is counterproductive to economic growth. I feel like the European Commission has a bit of an authoritarian approach in terms of dictating regulations to member nations, forcing things upon them. There's the lack of natural resources and the political will to extract resources like oil and gas from the ground, from the leadership there. How would you respond to those criticisms? And how do you see the European Union potentially becoming a global superpower?
Well, first of all, I'm going to put my tinfoil hat on, and I'm going to say these days, and it's a curse, you can't believe much what you read. So when you read something like that, if you spend a bit of time and trace back the source, you'll find it's a propaganda source. Yeah. And America has for many years had a propaganda effort to say that the EU is rubbish. The Euro's rubbish, the EU's rubbish, Europeans, they're rubbish, and we're great. And you know, you can find all sorts of stuff and read about, oh, this country's done this, and you trace it back, and it's a PR publicity propaganda effort by the competitor to make the person that they're competing with sound rubbish. And it's amazing. You can just do that all day long and trace. Oh, I can trace that thing that said America was mad. That goes back to Iran. And they've got a group of things in Qatar that write this stuff. And, oh, look, this thing that says these guys are great. Oh, I've traced that all the way back to Pakistan or Israel or America. And America, obviously, we are the big enchilada. Europe is a threat for that global dominance. And in a very nice, gentle way, they always put down Europe. But, you know, don't let that color your vision. America has, you know, GDP of X. Yeah, 300 and odd million people. There's 500 million in Europe. That's a lot more. And they've got as much money. And boy, they can read, most of them. I mean, if you look at the problems of America, yeah, you know, and the White House will tell you about them. You know, health care, educational standards, law and order. Yeah. And there it is. And then you look at Europe, they don't kind of seem to have those problems. Yeah. They've got their own, they're just humans after all. But Europe is, look, there's this great way. If you want to dominate, you make people dependent. Okay. They're dependent. Yes, sir. Yeah. You give them money and it eats them out from internally. You know, you give African countries aid, they have no industry, they can never escape that gravity well. Yeah. So if you want to keep them poor, give them money. If you want to keep them weak, give them money. If you want to rule them, make them dependent. And that has been America's strategy since the Second World War. These people, they can't stop fighting, just make them dependent on us, and we get marvelous trade, and they won't kill each other, and everything will be great. Yeah. Well, they're changing that policy now. And that means that Europe will lose its dependency, which will be great for Europe, absolutely great for Europe. 500 million people, well educated, with a pretty decent system. All of a sudden, you know, being kicked out of the nest by a mummy bird to have to go out and deal with the world on its own without being dependent. Is that going to be bad for Europe? No, it's going to be great, isn't it? Europe with a European army? Yeah. But that's very scary, really. But I mean, nonetheless, it's not going to make Europe weaker, is it? It's going to make it stronger. It's not going to be invaded by the Russians, all 150 million of them, when there's 500 million on their side, and Russians have got $7,000 GDP per head, and Europe's got 30,000. I mean, it's something like 20 to 1 in economic and power, Europe against Russia. So, you know, but that independence, that cutting the cord, now you've got United States of Europe, haven't you? That's not going to be a powerless thing. That's going to be like United States of Europe with 500 million people and economic parity. Well, it's going to rise, isn't it? Because you've kicked it out of the nest. The strategy of weakening Europe by making them dependent on you. Yeah. Well, you've said, no, come on, get out there. And they will. Of course they will. They're not retarded. Yeah, they're just as smart as you are, but there's more of them. And they make a similar sort of money. So now you've actually forced them to pull their socks up. Yeah, they will. So, all this, the American exceptionalism, the American exceptionalism thing, if you can stand back enough from that, it's a pretty ridiculous point of view. And it's going away. The Europeans used to self-destruct because of their political system back in 1914 and 1939. Yeah. And that was their issue. That's gone now. United States of Europe. That's going to happen now. And that will be a great thing with a bit of luck. It'll be a great thing. So, believe in the PR that Europe's a load of old rubbish is not true. I live all over Europe, and it's a very well sorted place. And anybody that's been here and walked around, and there was some chess master that was in Spain when the lights went out. And his first thought, he said, was that they were going to start looting the shops. And then he went out and everybody was in the streets having a coffee, hanging out and being chill. And, so Americans would naturally imagine that somehow Europe is going to be looting the Gucci store. So, Europe, and there's a lot of money flying out of America right now into Europe because with the potential downside conniptions that come in, it's a safer place for the money. So, that is a big, potentially a very big upside of all this is Europe no longer being kept dependent on the US. And why should it be? I think if you think about why that would be a thing, it would be America saying, we got this conflict in Asia. And they've said it, actually. They've said it. Oh, we've got issues in Asia that we need to focus on, which means you sort out Russia, we'll sort out Asia. And that's a smart strategy because that's easily done, right? Well, not easily, but it's doable for sure. But another thing that you said about rotation out of stocks into other assets, when markets go down, that money disappears. That money that's tied up in the NASDAQ and in the S&P 500, etc. When that goes down, that money goes. It goes to money heaven. It doesn't run away somewhere else. It's gone. It goes. So you have a market that falls 50%. That's $25 trillion gone. And that's a big deal. You see, what people don't understand is the American financial and economic strategy has been to print more money, but push it into places where it doesn't get spent easily, but increases wealth, increases liquidity, trickles down. And that's real estate and equities. Yeah. So they go, oh, there's a need for more money. Pull the lever. Don't give it to poor people because they'll spend it. And then we'll get inflation. Give it to the rich people because they'll go, oh, I've got more money. What am I going to do with that? I'll put it in the bank. And then the banks will lend it out. And then maybe the poor people will be able to borrow it at 29% interest or something like that. But it won't cause the inflation that we're worried about. Now, in COVID, they handed it out to everybody and bang, you got inflation. In Europe, when they did that, you would go into a supermarket and all the hard liquor was gone. And that's because normal people went, I can upscale my alcohol now from beer and wine to hard liquor. Yes, I've got some more money. Boom. So they went, thank you for the money. Up went the prices of hard liquor because they upscaled with the money there and then on the spot. And if you print money and give it to normal people, they need to spend it. They don't pay the cards down, they just spend it. Yeah. They need to spend it and they want to spend it. They like to spend it. It's not often they get the opportunity to have money that they can spend like that. So bang, it goes straight into inflation. If you give it to a rich bloke, that's very nice. Thank you. Bank. Oh, I'll buy a house. Oh, funny enough, houses go like that because that's the sort of thing they buy. Funny enough, Ferraris go like that too, because actually back in the .com, they priced out a price of supercars and the price of supercars had gone down and down and down and down and down and down and down, because technology made them cheaper to manufacture, and they thought if they lowered the price they'd sell more, and they were right. But then when we got round to the modern period with so much money, well, they go, oh, we can charge more and 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 more. So your supercar has gone from what you could buy $150,000 for your Ferrari, it's now $500,000 or $1 million or $2 million, $5 million. Where the hell did that come from? Well, that came from because the rich do sometimes spend. So you do get rich man's inflation, houses, luxury goods, that sort of stuff. Rich man's inflation. There has been that, but it hasn't. That money doesn't affect poor persons or normal persons' inflation so much until you give it out to normal people, and then you get normal people's inflation. So the idea is you pump money in to things, to equities. Everybody can buy equities. It's within reach of everybody. Yeah. And real estate. Well, if you try hard enough, you can buy real estate, and most people have that. So it's not unfair. Well, it kind of is, because money goes to money, right? But nonetheless, it doesn't go straight into the supermarket and push up the price of tomatoes. Yeah. And you can keep pushing the money in that way, and then it trickles down, and then it goes into the economy, and the economy reallocates the capital, and you can lever up your economy, make sure it has enough money without having and control inflation at the same time, apart from when you helicopter money because you think the end of the world is here, like in COVID. So they are pulling out the helicopter money, and which is why we're back to almost what they like as inflation to 3%. And they've, if you look at the Fed's balance sheet, they've been pulling money out for several years now, and the balance sheet's coming down and down and down and down, and the measure of excess money, which is called the reverse repo, down and down and down and down and down and down. So they've been now the emergency is over, pull the money out of the system and get it back in balance again. So we've got the right amount of money for the right amount of inflation, for the right amount for the economy. And they've been trying to do that, and they've pretty much got there, almost made it. And now we're into this new world, which is, who knows what that's going to do, because if the market is right, we're fine. If the market's saying, all these trade deals will all be work out, it'll all be great, it'll all be brilliant, don't worry about it. If the market's right, well, great, fantastic, I can go back to buying equities again. But I don't think it is. And how that's going to pan out, because the disruption of global trade will cut a chunk of wealth straight off the top of everybody. I mean, COVID, it actually, if people want to vision it like this, everybody got 10% poorer. That's why everybody feels it. They've got the same amount of money, but they feel poorer. Inflation, you can see it as prices going up, or you can see it as your wealth going down. Inflation is your wealth falling. And of course, if everybody goes, we're going to take 90 days off now, yay, we won't do anything for 90 days, you come back from that poorer, don't you? Yeah. And the world stops, and the world gets poorer. And this tariff thing, the world is going to get poorer, and America's going to get poorer. And it's almost like we've been told they don't care, because they want America to be able to keep its primacy. And you can't have primacy if you can't make soldiers' boots, right? Or ships. I mean, hey, why they're charging $5 million for a super tanker to park in America and unload oil if it's made by China? Why do you want to make boats? There's tons of boats. I mean, South Korea makes as many boats as you want. They have boats, and they ship these boats with boats on them. They stack boats on a boat, and they sail them to you. Yeah, well, it's not much good in a war, is it? Those boats will never get to you. So you have to have boats. Well, you can't make boats unless you've got facilities. You can't magic them out of thin air. So you've got to make it impossible for people to buy other people's boats, so you can build your own, so you can build the ones that go bang. Yeah. So when you get to see all those themes coming together, we're all going to get poorer, aren't we? And that is sobering. And that's the most likely outcome. So what goes down? Everything goes down, because everyone's got less money. Real value, wealth, the real stuff, not the number adjusted one, the actual, your asset base. Assets go down. That's it. You've got assets. They're going to go down. A lot of people haven't got many assets, so they'll go, as long as they're employed, they'll be fine. If they're not employed, they're going to have a hard time. But assets in a bear market lose their value in the same way as you could look at houses in America and go, wow, they're so much more expensive in real terms. And they are. You could buy a mansion in LA in 2000 for nothing, pretty much nothing. And now all these things are 10, 20 million. And I remember because I almost bought one. I thought, wow, that's really Hollywood Hills, $600,000 mansion? No way. Yeah. And then suddenly, within a few years, actually, off it went because of the way that money was pumped into the system, and it went into to recover from the dot-com crash, and it went into real estate. So we're in a very big change, and that change is brought upon by America trying to defend its primacy through the ability to actually, make stuff. If you can't make a light bulb, you've got a problem. If you're having a conniption with the guys that make light bulbs, and I don't know whether America started making light bulbs again, but a few years ago they didn't make light bulbs. Maybe they were only incandescent ones, but you know what I'm saying. It's like there's probably a number of things that America doesn't make anymore. Well, you can't have conniptions with the people that are making it for you. If they could say, okay, well, you can't have any 6-inch nails anymore then. Oh, I have to make 6-inch nails now. Oh no, I'm gonna have to build a factory, 6-inch nail factory. That takes time. That takes time. So that whole move, and then you've got the AI thing on top, which is massive, world changing. It's like when they invented the steam engine. It's that big. So you've got these things all coming together at the same time. And that is going to be a big opportunity if you know how to model it, and you know how to get out of the way of the oncoming train when it comes, etc., etc. So big opportunity, but really bumpy ride. So if you're in a business, for example, which is normal economic activity, the commodity for that might not do so well. And then suddenly you've got another commodity that speaks to America. You could say rearming, really. Let's just say what it is. America rearming, commodity that's important for that is going to go up a lot. And that's the commodities game, isn't it? You pick your commodities and you lay your bets down. I mean, you can certainly do incredibly well if you're brave enough to go leverage and do all that crazy stuff. Or, you can play that through ETFs and not be silly about it. And away you go. But it's certainly, you've got to get a picture of what's coming up. And that is quite difficult right now, because at the core of it is a group of people that, even if they knew what they're doing, which they probably may do, they were not going to tell you, right? Because they're playing a game. They might be playing it brilliantly, and they might be playing it really badly. We don't know yet. How can we know? Yeah. And well, anyway, the outcome is going to be a lot more than the normal range. So the volatility of that, if they get it really right, certain things will go absolutely ape. If you get it really wrong, certain things will go absolutely ape. The range of outcomes is much bigger now. And that, of course, is an investor and speculators, happiness for them, because the opportunity to make money is there. I prefer to be not trading, i.e. going, oh, this is happening and this means that. What I was saying about platinum palladium, I prefer not to be operating like that, because, that is speculation. And speculation is just another word for gambling if you're not careful. I much prefer to invest in really solid companies in the ups and downs of the economic cycle. You can make your very, very good, solid returns and not have to be spending your whole day worrying about what someone's going to say on TV in the afternoon. And that, I prefer that. But if you actually want to, if you want glory, this was going to be the time for that. And it's going to be a very, very volatile market. I mean, it's very 70-ish, really. And commodities absolutely lost their minds in the 70s. I was there. I was a kid. I used to listen to the commodity rings on my father's telephone on an earpiece. That's kind of where I come from. And we're probably going back there, because this is kind of like starting. So much of what we've seen in the last 20 or 30 years is building on a pyramid of value. Yeah. So you take a little bit of gold and you get a little bit of silicon and you get some wires and you make a chip. Well, this is kind of going to go back to basics again. We're going to be starting at the base of the pyramid and building up. and that's where your commodities are. And there is not enough copper for what's going to happen. There is not enough platinum palladium for what's going to happen. There's probably enough gold, hopefully. It will get more expensive, but there's probably enough gold to have around for what is going to happen, because we don't want it. So there's not enough gold to go around. That will be, as I said, we'll all have a lot to worry about if gold is $5,000 an ounce, and it probably will be. We'll all be buying our nails, and it's going to happen. Though it doesn't matter. What I say. The market doesn't listen to me. Certainly, there's nobody in power that's going to be listening to me, and you can see the direction of it. So the direction is of a kind of incredible industrialization that's going to go on, that is based around this AI. When they talk about, these jobs, don't worry, you won't be making sewing shoes, American workers. It's all going to be done by robots in autonomous factories. Well, okay, hopefully soon, because they can't do it right now. But yes, that will happen. But you imagine when you can build a factory and it just turns out shoes on its own, or whatever you want on its own. Well, that again is that's an X factor, isn't it? 10X factor. So that is where they're aiming towards. That you've got these robot factories doing the work of the workers. Meanwhile, workers upscale themselves and become whatever, I don't know, professors of philosophy or whatever it is above working in a factory or working in an office. And that's the vision. Well, it's not going to be people in sackcloth and ashes being socialist and growing braids, is it? It's going to be a highly consumptive industrial dynamic, and commodities are going to be needed for that. And that's going to be a thing. But it's not going to happen soon, but that is the direction of travel. And all you need to know is the direction of travel. And then, you back it accordingly. If you want to get rich quick, you're going to get poor fast. But if you're prepared to, take your time, you're going to get there, aren't you?
Well, Clem, this has been a fantastic conversation. So many insights shared. Tell us about your website at newfn.com. Anywhere else you want to direct people online, you want to discuss your books, anything, feel free.
Well, I've got some investment books out there. They're pretty old, but they're still pretty useful. I'm creating this new site, which is called a new FN. I built various sites in the past that your users might hear of, for example, Investors Hub and ADVFN. And I decided that, and I think a lot of people agree here, if you go onto your daily website for stocks and shares information or commodities or whatever, boy, that looks unchanged for the last generation. It hasn't changed much in the last 25 years, has it? So the thought is, do something, or maybe that's a bit unexpected. Oh, and that's fun actually as well. And wow, okay, that's new. So a new FN is we're trying to put together, and something will come of it in this year for sure. It's very near coming. It might be European to start off with, but a new FN will be a new paradigm, and it'll be a lot AI driven, because AI has just got an amazing ability to go out and pull everything you need quickly and put it all in one place. And so there's going to be a lot of AI there. See, we'll be boiling the oceans too. And if anybody wants to be there early, there is what amounts to a wait list. And if they put their name on the wait list, they'll start getting emails saying, in another 90 days, you'll be admitted to this marvelous stuff. Because what we're doing initially will be very heavily resource heavy for us. So, we don't want the whole world showing up and killing us. That it will be the early group of supporters will get access to our tools first. So we're building up that way. People are quite keen on it. But that's the modern way of doing this stuff. But it's exciting investment, AI and powerful data put together into something which you don't have to do that to use it. And you probably don't want to do that to use it, but somewhere between you pulling and it pushing, rather than, you go on the web and you have to pull it, don't you really? You have to lean into it. And, if you want to watch Netflix, you don't lean in, do you? You lie back. It will be somewhere between that. So it will be helping you, giving you what it already knows you need and want. Meanwhile, you are looking for more it's going to be a new experience. So if anybody wants to get in early on that, they should just put their email on the site, a new FN, and in due course they'll get the call.
Great. Well, I'll put a link to anewfn.com in the description below so people can check that out. Clem, thank you so much for coming on the show. It's been a blast.
It's my pleasure, Jesse. Thank you for having me.
Thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver Gold Osmium. Take advantage of their specials now. Silver Kangaroos 2023 1-ounce coins, $2.47 over spot. Silver Maple Leafs 2025 1-ounce silver coins, $2.87 over spot. Both of these deals are while supplies last, so reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.